All right, hello and welcome to Camel Finance. I'm your boy Camel, and today we're going to be talking a little bit about banks and biology. We're going to be talking a little bit about the FOMC meeting, which kicks off today and concludes tomorrow with a rate hike. Then I'm going to be showing you some nice looking charts and some interesting things with regards to Bitcoin. And then we're going to have a brief look at a few charts. But I will preface this by saying I don't really put any weight on the price action between now and finding out what that rate hike is tomorrow. But in the meantime, sit back, relax, hit that like button, and let's get into this. Some irony here from the Credit Suisse CEO, as he said that Bitcoin, whilst it was at $7,000, was the very definition of a bubble. Fast forward to today, and Bitcoin is pumping past 28k, whilst his bank is failing. Another bank, First Republic Bank, is apparently on the brink of collapse, as you can see from the share price chart. So here is another bank that cannot meet its customer withdrawal demands. And here is a list of uninsured deposits by bank. As you can see, BNY Mellon sitting at 97%. There's a total of 8 trillion uninsured deposits in the US. Roughly 40% of all deposits are uninsured. So this banking crisis could well be far from over unless the Fed is willing to step in and print a bunch of money to bail them out. Just remember, tweet here from Balaji, okay? The same people that told you the buildings weren't on fire are now telling you the banks are not on fire. So you can see here, fiery, but mostly peaceful protests after police shooting. I mean, crazy. But here they stand today telling us that the banks are not on fire either. But remember, they know that they are. They know that they are because they issued it in a statement, in a footnote, where they were talking about having only 4 insolvent banks at the year end of 2021. Just 6 months later, that number was at 333. So is Balaji right? Well, most people seem to think there's zero chance. I think there's a non-zero chance he's right with respect to his $1 million Bitcoin bet in what is now just under 90 days time. Jason here did some quick maths and said, look, how many Bitcoin does Balaji have? If he's got 1,000, making him a whale, then he would only need Bitcoin's price to rise around 4% to pay off this $1 million Bitcoin bet. So is this just a marketing ploy from Balaji? Well, according to him, he says you still don't get it. The Fed is devaluing the dollar. We know this is fact, by the way. It's what Ray Dalio predicted, monetization of the debt. All the wars paid for in a mass of printing. The dollar's worth toilet paper on the other end. This isn't about making money at all. It's about getting the innocents onto the Bitcoin lifeboats before the Fed crashes the ship. I think there's more merit to what he says than most people give him credit for. In just a week, remember, the Fed has reversed half of its entire year's worth of quantitative tightening. The Fed is back to easing, even though it's not calling it easing at the moment. So here's a more complex argument. American macro is like Soviet macro. The macro guys thought that Bitcoin couldn't exist. The Nobel laureates denounced it. They all said it would die. Yet here it is, because Bitcoin doesn't fit within the standard macro. It can't be inflated with a key press, nor is it easily seized. So Bitcoin isn't within the macro system. It is indeed an exit from the system. As I often say on this channel, Bitcoin is the exit. And the USD denominated in Bitcoin price represents the desire to exit, which is ever increasing. Hyper-Bitcoinization, the point in which humanity decides to start denominating all assets and commodities in Bitcoin, is when that desire goes vertical. And now the Fed is initiating digital dollar devaluation, and the macro theory is ending in a mass of bank runs. More will want to exit too. And remember, as every one of these banks collapse, it forces people to reconsider what they thought they knew about banking and how safe their money was within their own banks. With every bank that collapses, this becomes one of the best marketing campaigns Bitcoin could ever have hoped for. And so what's next for the price of Bitcoin? Well, I've got an interesting 30-second clip here to play you from Kevin. Have a look at this.
Bitcoin from 15,500 at the beginning of the year to where we are now currently at 28,200. Bitcoin has created 2 bases of support, and possibly we're about to create base 3. Why is that important? Well, if you look at the parabolic diagram, it suggests after 3 bases of support being created within the parabola, the stock price then doubles, or in this case, the crypto price then doubles after base 3. Guys, this means we have a possible base being created around 30,000 and then double to 60, according to the textbook.
So things are looking constructive for the price structure of Bitcoin, and they continue to look constructive elsewhere. Because despite this aggressive rally, this Bitcoin move appears to be mostly spot driven. There's divergence between spot and perps. Open interest is still low, outright and relative, and the funding rates and 3-month future basis is muted. So you can see here at the top, the Bitcoin price. You can see here, the second graph down is the aggregated spot buying for Bitcoin on the rise. However, when you then look at the futures, the aggregated futures, which are coin margined, as you can see, there's massive divergence here, and this is true of the stable coin margin contracts as well. So this move is largely spot driven, and of course that means it's a far more trustworthy move. Again, you can see futures open interest in green, and in blue, the perpetual open interest. And as you can see, we are nowhere near the elevated levels we were at prior to the FTX collapse. Again, suggesting this move is indeed for real and based on real spot-driven demand. The orange here, future annualized rolling basis, as you can see, not pumping up like the sort of thing we see at tops, not even nearly elevated relative to the price. And lastly, the futures perpetual funding rate in green, as you can see, nowhere near the elevated levels, barely even visible. Meanwhile, the perpetual funding rate sits right around the zero line. What we are seeing in the face of this banking crisis is real-world spot-driven demand for Bitcoin. Cheds here points out that the high time frame bear thesis is dead for Bitcoin. We have completed a inverse head and shoulders here. If I click a couple of these buttons, you should hopefully see we can do a measured move from here to here. And what you will notice is for this head and shoulders to reach its measured move target would put us at around $42,000 Bitcoin. Things continue to improve under the hood as well. The largest renewable energy generator in the world is hiring a manager for their Bitcoin mining data centers, as you can see here. And it keeps on getting better because people who started to DCA, dollar cost average, into Bitcoin at the 69K all-time high are now up 10%. So all you have to do is not even look at the price. Just set yourself a weekly, a bi-weekly, or a monthly buy and buy the same quantity of Bitcoin blindly every single week, bi-week, or month. And in just 12 months, you're already up 10%. And of course, that assumes you bought the absolute Pico top. So as we look out to tomorrow for FOMC, you can see the current rate probabilities are sat at 85% chance of 25 basis point hikes, with around 15% chance of seeing a pause. So this to me is good news, because assuming we don't see a 50 basis point surprise, then 25 basis points is already baked into the price action. That's already been accepted by the market, and the market is forward looking and therefore already over this. But there's always a chance that we do see a pause, and if we see a pause, that is going to catalyze massive, massive upside for risk assets in the short term. So assuming we don't get any surprises out of tomorrow's FOMC, you can stay bearish all you like, but the Nasdaq is breaking out and targeting a run to at least its prior all-time high here. If Apple goes, the rest of the market's going to go. And I posted this yesterday. Apple wants to break out here as per the YouTube videos. So I've been talking about this on and off. If we can get a break above this box here, then you will see me add along for Apple. So I want to get through FOMC. Preferably, I want to see breakout, retest, resumption. But I posted this to Twitter because a lot of people have been asking me, can I post my trades to Twitter, or can I put them on TradingView? I don't really want to put them on TradingView, but I will put them on Twitter for you. I will say one thing just before we get into the charts though. Remember, it's much better to learn the strategy. It's much better to know what you're going to do ahead of time. Are you going to buy the moment that the price crosses this blue box? Are you going to wait for a daily close? Are you going to wait for a throwback? All of these types of nuances are specific and individual to each trader. So the main thing to focus on is just making sure you know what you're going to do ahead of time. So starting off with the S&P here, can the S&P get a breakout and go? Can it clear this final line of repair in purple, opening up an attack on 4,800-ish? Or are we going to have to do some kind of rejection here that then rolls over into that daily cycle low before we can have a think about repairing? Tech is definitely leading, as you can see here from the Nasdaq, so not much more to say about that. I would not be surprised to see a retest or a throwback of this area over the next couple of days that then resolves to the upside. But right now, tech is telling us that it wants to lead. The Dow Jones holding the bear market resistance line, isn't it? Trying to flip the bear market resistance line into support. So can it come out of here? Can it break out and go? If so, you will see me add along. In fact, I'm going to line along up right here for you right now. So it will look something like this. As long as there's no surprises in FOMC, it looks like we got in near the bottom and got out near the top for the VIX. So happy days. I do want to see this slowly start to come down onto a 17, 18, 19 handle over the coming weeks. And I think as long as we don't get any surprises at FOMC, that should be more than reasonable. Russell 2K, I would not be surprised at all to see this sort of rip up here, pull back and then break out. If so, that will be a long from me. So another trade called out well ahead of time. FTSE 100 to me tells me it wants to do something like this perhaps and then break out. So I will be patiently waiting until we break out of this downward sloping yellow resistance line But if we can do that, then I think we can put a long on target the top of this red upward sloping resistance line for a final blow off move. So something I've been talking about for a long time on this channel is eventually making it back down to this blue upward sloping support line that was good support all through here, here, and here, and here, as you can see. And now we are finally starting to do what I thought we might, and that is that we are breaking down, retesting, and looking to resume lower. So if I grab this tool and move this line out of the way, you can see, is that what's coming over the coming couple of days? I would think so. I would think this is finally time to see this breakdown, retest, and resume lower. Confirmation, of course, will come on Wednesday after we've seen the FOMC results. US 10-year yield may be wanting to come up here and make a lower high before then rolling over. Or perhaps if we can get a pause tomorrow, then we'll just see this collapse and risk will come on massively. Same is kind of true of the 2-year yield. Some kind of counter trend bounce here that then rolls over wouldn't be beyond the realm of expectation, but I also wouldn't be surprised to see this just dive off of a cliff either. Things in the crypto world continue to look constructive. So according to the head and shoulders pattern that I showed you earlier from Cheds, we are targeting around 42k for this move. Now, it does not preclude some kind of throwback to this over the next couple of days before then working our way up into that daily cycle low and going again. But I remain very bullish here. Ethereum seems to be lagging. I really don't like this coin. The more time goes on, the more I just completely want to get rid of Ethereum. But we're long, we're strong, and we continue to push for now. XRP is still doing a whole lot of nothing, but as I keep saying, if we can get a breakout above this red horizontal here, then you will see me add a long. And I think that that could likely be coming up in the next couple of weeks. So we'll see about that. The crypto-related equities, again, all of this kind of price action is somewhat null and void until we see FOMC. But for now, this continues to look good. Wouldn't be surprised to see a bit of a throwback before we can go higher, but I do expect this to resolve higher, so long as there's no surprises from the Fed. MicroStrategy as well, doing exactly what we'd hoped it would. So that's great to see. Riot looks to be leading here, which is really, really, really nice. So happy days. And then lastly, Marathon as well. Marathon kind of pulling back a little bit, but it has broken out. It is currently completing a retest and resumption higher. So I expect that to continue higher as well for Marathon. And lastly, before I love you and leave you with a meme, I've been talking about this scenario here, which obviously is not playing out at the moment, but I did say in a prior video, I wonder if we're just going to do this from higher up. So are we in the middle of doing that now? I wonder if what we will see is risk come on following FOMC tomorrow. I wonder if what we will see is stocks and crypto start to go on a tear, and that will catalyze our final dip down lower for gold, in which case we will need to be hyper vigilant, because here, I'll be honest, I was somewhat distrusting of this move here. There was also an opportunity to get in here on a breakout, retest, resumption. We missed that trade, but that's okay because you can't take every single trade. I do wonder if this is what we're going to do now. I do wonder if we'll get to be able to draw a trend line across here and then buy the breakout from there. So a little bit more patience from the metals, but I think that will be rewarded. It's a similar story from silver. You know, I said, I wonder if we're going to do this. Are we just going to do this from slightly higher up? Perhaps. The miners are somewhat lagging here, aren't they? So they're more or less on pace. They're certainly not leading, which tells me there's relative weakness in the miners, because you'd want the miners to lead if gold was really going to go on a true bull market, bull run. I do think we're nearing the stage where dips can be bought in an uptrend for the precious metals, but I really would like to see one more dip down, as I've been talking about for a while. That will give me much more confidence that we have a good chance here at moving higher. Plan B for the precious metals is if this just continues to blast off, it will certainly get stuck at resistance here for a little bit. So then we'll either look for a pullback to get long on a breakout of, or we will look for a consolidation before a breakout, and we'll buy the breakout above the top of this range, expecting a run to new highs. But I think the question is, why gold now? Why gold now? I don't think it's quite the right time just yet. However, if the dollar's going to come off, then maybe it is gold's time to shine. But this price action here tells me to be open to one final dip. So we'll see if we can get that. Almost forgot, TOT coming off, isn't it? Coming off. So are we going to see this? Are we going to see risk come on? That, of course, remains to be seen. All eyes are on tomorrow. If you found value here today, I'd appreciate it if you could drop a like on the video. Subscribe if you're not already. Make sure you turn the notifications on if you want to continue to get updates for free on all of my trades, how I handle these markets in real time as a pro swing trader. Trade safe. Volatility incoming today and tomorrow. I can guarantee that. But once the dust is settled, we will know which direction the markets are going to go, and we'll be able to position accordingly. In the meantime, I'm your boy Camel. Take care. Hope you're doing well in life. All the best from me. Cheers. Bye.
Mau dikunyah macam Andy lah. 係啊，
唔係啊，咁就再殘忍啲啦。唔係啊話，喂，小心啊！上我上！